This is one that Charlie Munger was.
You gotta, you know, we don't. Oh, here it is. Okay, got it.
There you go. Charlie Munger was saying, "Oh, Alibaba, we should invest." Look at what happened to their revenue growth. Went from 63%, 33, 29, and then look at this, 9%. They're literally, their net income, everything dropped off. All the equations in the world that they had, that Alibaba was going to be this giant company. Guess what? They made the wrong moves in China, and boom, now they got sliced, right? So it just goes to show you that sometimes even people that are like, oh my God, I can predict everything in the future, there are events that can come around that can throw your entire thesis off. And the exact opposite can happen, where you think that this is a shitty company and certain things just work in a certain way, and boom, things go skyrocketing. Look at how many of the energy companies right now that have done dramatically well. Who would have guessed a year and a half, 2 years ago that the Russians were going to invade Ukraine? Well, maybe Palantir knew. Maybe Alex Karp knew, because Alex Karp was like, listen, we're in for some bad times. I don't know how he knew. Maybe he couldn't outright say it. Maybe he had, I mean, Palantir does have government contracts and NSA work. Maybe they saw this coming. Who knows? Maybe that's why they bought gold.
Well, it's Kris. Kris, this is why we do this. This is why we do this podcast, because the next thing I was going to share is this this tweet I just liked the other day, or just like 3 hours ago. On August 17, 2021, in preparation for a Black Swan, here is what Palantir did and has no debt. Coincidence, or is their software actually working for them? This is when they bought $50 million of gold. Now, I'm not trying to be super conspiratorial here. That's not the point of it. But damn it, it's interesting. It's like, why are these guys buying gold months before the entire market tanks? And gold, I'm not saying gold is going to the moon or anything, but it's definitely a nice little hedge right now, given what's going on with oil. Sachin, any thoughts on that? I think we'll wrap it up in like 10 minutes. Any thoughts on Palantir's ability to kind of be ready for these moments and have no debt on their balance sheet and use stock-based comp instead? Because debt right now, with interest rates rising and them being a growth stock and them DPOing, we might have the share price at like $6 versus $10 if they had debt.
I think it is important to also notice that which other company has gold on their balance sheet. I mean, I don't recall any. So what we are seeing is Palantir is trying to make moves which are actually very different. We saw in the case of strategic investment, they went with a SPAC, with a very frontier kind of mainstream, not so mainstream companies. So they are making some bets which are very different from rest of the companies, and they make it very clear they are making these bets based on their view of the future. And their view of the future is that the world is going to be a volatile place, at least for now, before either it becomes utopian or it becomes dystopian. Okay, and they are just want to play their role in that to ensure that if they stand for Western democracy and Western values, that how well they are going to protect for it. So it is clear. I mean, I don't expect Palantir to know a lot of things what government knows. Okay, because they don't mine the data what the government is mining in their softwares. But I do expect like these people are having and discussing with Palantir. So somebody from a senior guy, and he says, okay, is it possible to build a use case where we can predict the probability of a certain event, political event? And then somebody will say, okay, how? Let's try. And that you build a use case, and then you get a feedback that, yeah, I mean, the case was good. So you start getting an idea, as even in an indirect way as a CEO, that this is something on politicians or defense mind nowadays. That means they are expecting something to happen, which is going to change how the strategic commands look like. So getting an inference is something, I think what Alex was getting. He probably was getting these kind of requests and demands a lot. Okay, that could have triggered. And also, I mean, in a simple way, like even if why they bought gold. Okay, there are three reasons I mentioned earlier as well. Like one is like, if you expect that the currency you are doing the business is going to be impacted severely in a flash crash or some sort of event, you need to prepare for it. Okay, that is one. So gold could be one hedge for that. The second thing is that they were dealing with clients who wanted some sort of bank guarantee that you can really deliver solution to us even if the world goes to end kind of situation, because you are helping us in this kind of a front end scenario. So they said, okay, what is that? Said, okay, we can have a gold. We can put it in a kind of a storage where we can have a joint custody. Okay, that
well, why would that make clients feel more at ease?
See, the thing is, like if they are relying on Palantir and they say that Palantir doesn't have capability to function or pay to their own employees, that means the client itself is at risk. Like a lot of time people say, like you say, okay, oh, I'm preparing for the end of world, so I have gold. Other person say, I'm preparing for the end of world, but I have rifle so that I can steal the gold from the people who have gold. So it's about your view of the future. Okay, so Palantir is a very opinionated company. Okay, it's not like there are few companies who will drop pant in front of everyone. Okay, Palantir is, say that we have certain opinions about future. Our product, our solutions for client is actually geared towards it. Okay, whether their opinion for future is right or wrong, that will play a large role in their success. Okay, and as investors, people who are long and short will have to face the consequences of it, and industry as a sector also has to face a consequence of it. Because if you see in terms of pure data companies, Palantir is probably the only company that is going to reach $2 billion revenue in the year 2022. So it doesn't matter you love it or you hate it, it's a major player now. It's been used by major companies, it's been used by major institutions. So it has a mark. Okay, and it is working in a ways which is very different from a lot of conventional companies. So the growth in Palantir is going to be volatile. It's not going to be very systematic as we have seen in a lot of other companies. It is something different. Okay, we will find out soon.
So there's one thing I was very critical of last quarter when some of these people on say.com were talking about it, but I'm kind of coming around to the idea now. So the idea was, would Palantir consider doing share buybacks? And I was like, that's so stupid. They're still early. But let me tell you, if the price drops enough because of these macro level events, that might not be such a bad idea to buy up some of those outstanding shares and reduce the share count, So just as any company should at the same time be willing to do that, because guess what? You're sitting on $2.5 billion of cash. You're still generating free cash flow. So guess what? You have that excess capacity where you can take maybe 400, 500 million, right? And buy up a good portion of the outstanding shares. Not only does that support your share value, right? But remember, if your employees are being compensated in stock and shares, that means you're also supporting your own employees, right? You don't want to necessarily, it's almost like you're rewarding your employees by taking the excess cash and using it towards boosting the price a little bit. So right now, I would say all these tech companies out there that their prices have been hit, their stock has been hit, if they have free cash flow, right now is a good time to use it, especially if inflation is going to be degrading that cash flow at a 7% rate anyway. So that's what I would say. So I think the idea of share buybacks seemed ridiculous. But who knows? Maybe it's not as ridiculous as you think.
I mean, at this price, actually, it's a fair strategy. I mean, it needs still a lot of guts to think about it because it's very counterintuitive. But I would agree it's a fair strategy. The reason for that is that, see, Palantir has a lot of cash and Palantir is deploying cash at a certain rate. But Palantir rate of cash deployment or capital deployment is not that great. Their result of capital deployments are great, but they do it with a lot of scrutiny. So they are not able to deploy a lot of capital at large. I think that's their constraint. So in that particular case, if a stock is down, I mean, it is, and if they consider that it is down quite a lot in terms of fair value, I would say, it makes sense to do a bit of buyback.
Okay, Sean brings up a point in the chat. He says, Kris, the analysts would decimate them. I mean, the floor with a buyback. Too small. Their returning cash needs to be focused on customer acquisition costs and net retention rate expansion.
No, I agree. I totally agree. Like I said, it's just a thought, especially if Palantir drops to, let's say, $5 for some reason, right? And your market cap is $10 billion and you have 2.5 sitting in cash right now. I'm sure that you have expansion needs, but dude, trust me, you'll never get the chances of you being able to expense an entire year's worth of operating cash flow and doing buybacks would be crazy. You could reduce down 5% of the float if your stock drops enough. So that's what I'm saying. Like, and they just, I agree though, the cash should be going more towards CAC, right? And customer acquisition costs. But hey, listen, if the stock drops, the stock drops enough, it's your fiduciary responsibility to make that investment, And like I said, the return on that capital could be much higher because the price is so low, you know. So instead of investing just in expanding the sales force, right? If it gives you the opportunity to grow not as fast and be able to still command a higher valuation because your stock has been taken down.